In this video, guys, let's talk about where to anchor the VWAP. Stay tuned. Hey traders, warm welcome to you. Thank you so much for joining me. Okay, so I'm a big fan of the VWAP, right? If I'm using the VWAP on an intraday chart, especially a chart that has a regular trading hour session, like the SPY, like the Qs, like anything that has those specific trading hours, it's so valuable. I've gone through kind of details about how you use it before. Make sure you're subscribed, by the way, because I've got planned down, I've got my notebook here to really go through a lot of kind of intricacies and details about using the VWAP. I think it's such an underutilized tool that there's lots of kind of things that I'd like to share about that. So make sure you are subscribed if you're not already. If you are already, appreciate you. Okay, so let's suppress this for the moment and let's talk about this anchored VWAP. So TradingView has in its toolbar section an anchored VWAP, and this basically allows you to click where you want the VWAP to start. So if you were just doing the normal VWAP, that's going to start at the beginning of each day and give you the volume weighted average price for that trading day. Great, very useful. But what about if you've got a little bit more of a longer time frame? Where do you anchor it? So you can anchor this wherever you want, right? You can literally click Anchored VWAP and go, hey, I want to anchor at the beginning of the day, and it's going to do that. It's going to anchor it there. I want to anchor it somewhere else, and you can anchor it wherever you like. And basically, that's where it starts the calculation. That's the anchor. But the question is where the heck do you anchor the thing? So the rule of thumb is very simple. It's to anchor it at any point that is significant to other higher time frame participants. You're like, well, give me some examples. Certainly will. That's going to be things like the start of the month, the start of the week. Is going to be things like, hey, what was the prior high or the prior low or the recent swing high or the recent swing low? That's going to give you a bit of an indication of how many people are, where people are positioned and where the mean is, if you like, or the expected price, or where most traders done. So for example, here's a great one. You've got 5th of July, this low kicked in, okay, and it was exactly the same actually as the 1st of July. So you say, okay, I'm going to anchor it right on the low point of this rally, 3-day rally. So now you can see how far extended we are away from that VWAP, but you can see how useful that might be if we pull back to there, because most of the trade has been done in that situation or in that price. You could anchor it from the start of the quarter. So I'll come here and go 1st of July. There's my anchor, and we can see it's very similar, of course, because it's a very similar position, but it's really far away from price. Okay, so you might be like, okay, fine. So start of the quarter, start of the month, start of the week. I think those are all the great places to anchor this anchor your VWAP. Another way to do it is to look at where it was pre-Fed or pre-news. So if you're trading a stock or an instrument or something where there's been a repriced scenario, the market's repriced itself based on news or economic data, if it happens to be an index or a currency pair, you can anchor it there, because you're basically saying, right, people have started to position differently after this point. So where's the average person in, if you like? So where would they want to get out? Where would there potentially be support? It just helps you structure things. So might anchor from this high here, and you can see how it kind of keeps price in at this point. Price goes so far away from it, but as it comes back, it kind of keeps price pinned for quite a while until eventually it breaks through. I mean, look how many touches we have of seemingly an arbitrary line. But of course, that's a decent level. That's the high of that swing. That's a really interesting point. And so a lot of people are kind of positioned then. And for this whole move, that's going to be your volume weighted average price. In other words, where most participants are filled at, whether they're on the sell side or the buy side. Now, of course, if they're on the buy side, they're like, oh, damn, this has come way against me. I am coming to come back. And if you imagine that just giving you an approximation of everyone's blotter, so everyone's now long from that point, or the majority of people are long from that point. And what do people do when they're long from a point? When price comes back to that level, they want to get out. You've been there, I've been there. If you haven't got a structured plan, you're like, oh, if it just comes back, I'll get out. So that's exactly what happens. Comes back, people get out, people get out, people get out, people get out, until finally the tide shifts and supply demand shifts, and we're back up again, and this is a big kind of strong rally. But my expectation for this is exactly the same as it is for there. that this point is now the average price everyone's long from or short from. Shorts are hurting. Maybe we do get a blow off top, but at some point when it comes back and tests that, it'd be interesting to see if that type of thing holds. So where do you anchor it? Highs, lows, extreme points, opens, closes, start of the month, start of the year, start of the week, when you've had some kind of catalyst as well. Is one of the, you put at the start of the week. Look how it oscillates around that VWAP all through the next trading day until it finally breaks through. And even actually, you could argue, I might argue that it's that, but you could argue, well, there's a bit of still people here who are kind of wanting to get out after that big move higher. So it's a useful tool. And guys, in TradingView, it's on the left-hand side. You can easily find it. I'm sure other platforms have a similar thing, but look for extremes. Look for anything where something significant has happened. Fed example, great is where you pin it just before Fed. Ding there, and now you can see how everyone is positioned, and look how useful that becomes. Oh, it's stall price. Oh, it's stall price. Oh, it's stall price. And really, it's such an interesting insight into participants and how they position. If everyone's seen the Fed news, and you could argue maybe that it's possibly one extra there, but okay, you can see everyone's position. Yeah, along now they're all offside as it comes back. Of course, the first pullback towards it is going to be sold into, because everyone, the average participant, is well offside and they're stinging. And so, of course, when it comes back, they've got a first opportunity to get out without a loss or a smaller loss. They're going to take it. So, really interesting tool, guys. And those are some of the ideas on where to anchor your VWAP. Let me know in the comment section below where you anchor your VWAP. What have I missed? What is something that's really important to think of when you're trading using the Anchored VWAP tool? Take care, guys. Keep the risk managed. Bye-bye.